And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report, daily stock market show where we go through not just stocks, but also commodities, Forex futures, the news of the day. We have some fun with our team Tackle out there. And as always, the return of Breakout Frank. Friday, Frank, fun day, Frank. A pillar of positivity in our community. Frank, how you doing today, brother?
Doing good, thank you, and thank you for the nice words. Always great to be here. Always look forward to Fridays. I always try to get a jump start on my my scout ahead. I used to kind of do my scanning from around 11 to 2, but now I always want to get a jump ahead. So if I find anything interesting, I can share it. So you guys make me work hard on Fridays. So I appreciate
Dude, Friday's a busy day. There's no doubt because I know you, in fact, you do probably more picks than anybody, I would say, watching that week by week by week. And you do a lot of that like Thursday night, Friday morning. Every now and then when the market's going crazy, like last Friday, some of those picks have to be updated by the end of the day, right?
Oh yeah, absolutely. Yeah,
Today,
absolutely.
maybe not. I mean, a lot of the picks last night or this morning might still be valid. The
Yeah,
market's not doing much.
yeah. For the most part, I think that's a good way to look at it. It's most things are looking about the same right now as they did a little earlier today or last night. Obviously, there's still some big earnings, right? And there's some things out there like, I don't know, maybe an Amazon that maybe look a little bit different. But as a whole, I think you nailed it there.
Yeah, we're going to break it all down. We're going to start one step at a time. We got Cody screen sharing. I know he's out there in Hawaii and just the beautiful sunshine and the weather. I guess the Wi-Fi is not always perfect out there, right, Cody? You've had a couple of skips. Hopefully, knock on wood, we don't have that.
Yeah, I'm going to keep my camera down because I noticed my computer doesn't try as hard with my computer down. So yeah. I'm like Frank today. I'm actually part of the machine itself.
Yeah,
that's what's going on. That's what I'm talking about. Good job, Cody.
You are assimilated into the Borg. I mean,
yep. Who's next?
Here.
Who's next? Max Loss, you're next, buddy.
Back this out to a weekly chart, then a daily, then the hourly. I want to look at all the different time frames. Long term, Frank, we're hitting into all-time highs. Markets are still strong. Where are you going to rank this thing? I mean, it's a tough one in my opinion. We were cautious last week. It's been pretty good this week. What's your read on this?
I'll probably keep it about the same. We ended up settling on 35 last week, if I remember correctly. My initial reaction was 40. Personally, lack of follow through, and it's why it's so important to have it in my mind. On Monday morning, really kind of invalidated that candle that we were looking at on Friday. All right, we kind of stuck our nose below that support level intraday, flattened there, closed there. So I think with that in mind, I don't know that I'm going to give it an upgrade. Just again, but because it's still a pretty volatile, newsy driven type of market, I tend to be I'm going to go with the trend always, but I tend to be a little bit more conservative than maybe some of the other coaches when when the candles are bigger, right? When there's news of events, I kind of get a little on the wimpy side.
And listen, I mean, caution is a very appropriate thing to have as a trader. There's no question about it. Leaning on the right side, though, as a bullish trader here, I think probably about the same 35-yard line, 30-yard line, maybe. I think that's where it's going to come down to. We've had a pretty good week, though.
Oh, absolutely.
Four green candles in a row. We're ending on a red candle so far. We still have about 3 or 4 hours in the trading day here, obviously, but pretty strong week for the market. And a lot of that is that the market is kind of priced in this coronavirus thing as being subsiding right now. In fact, Frank, you were looking at the World Health Organization, affectionately, we call them now WHO. And the director had some things to say about the slowing of the virus. What were you reading?
Yeah, it was basically slowing in China for the second day. So let's not get crazy. And that's basically what the director said. Said it is good news, but let's still be cautious with it because it can zigzag. I think he used the actual word, zigzag was his words, not mine. So it does seem like it's getting somewhere, but boy, with a story like this, I mean, depending on the day or even the hour that you're talking, that can swing both ways, right? So just like Director Who says, I think Director Who is a good name. I tried to say the fine person's name.
Director Who sounds like a mysterious villain,
a Bond villain, or comic book villain. Yeah, for sure. I like it a lot, actually.
I do too.
Director Who.
Director Who. Yeah, but it seems good news for a second day in a row. I mean, I guess we'll have to take that at this point in time. I think we all want to see an end to that for more reasons than just the market.
Oh, for sure. I mean, the human element of it, obviously, we don't want to have that number expand, and having it slow down for 2 days in a row is a good thing. Cody, I still think it's fair to say, and we're not going to spend a lot of time on this today, but that we're a long ways out of the woods on this, right? I mean, there's still a lot of information, a lot of data, and that virus still has some risk in it, correct?
Yeah, there's definitely risk. And right now, it's just we're getting more and more information. So the reason it was so scary to begin with, and I talked about this on the podcast, 2 weeks back now, was that it was unknown to the scientific world. This is a brand new, never seen before virus. It is in the coronavirus class, and it just freaked everyone out. The more time that goes by, the more we're going to learn about it. The more we learn about it, the more we know how to contain it. We know how to treat it. We know how to research on it. So even with numbers increasing, because we're learning more and more, the fear gauge doesn't, ramp up as much. So nothing's really changed, but the fear's not increasing because we're learning more and more about the virus itself.
Mm-hmm. Yeah, no, I'm with you. And the markets are kind of taking it on the chin this week and then running right to the upside. We're breaking into new highs in many, many of the markets. Flash fire right through these different markets. And going back down to an intraday real quick on the ES, Cody. Then we'll come back to the YM, the Dow, the other ones as well. Intraday, we're not exactly looking great here. I mean, from Wednesday, Thursday, and Friday, we haven't had a lot of price movements. So the original bullishness this week, guys, was early in the week. How you end the week, I mean, that's might be why you've got a little caution here, Frank. We're kind of sputtering a little bit. Is that what you're saying?
Yeah, just a little bit. I mean, not enough to be, overly concerned or anything like that, but we're kind of hanging right above that resistance. We stuck our nose above there yesterday. Just a little bit of drifting to the downside, and we still have a big week of earnings. I mean, there's I think 70 something S&P companies with earnings next week. I know it feels like it shouldn't be earnings season anymore, but there's a bunch still yet to come. Yeah, we've got a lot of the bigs behind us, but it really, more than anything and more than purely technical, for me, it kind of comes down to increased volatility in the market is just always going to get me being a little bit more on the safe side.
Yeah, no, I'm with you. And one of the indexes I do want to look at here, Cody, as well, is the Russell 2000. I'm not seeing a lot different in the S&P, NASDAQ, or the Dow. So why don't we skip right to the Russell 2000? Guys, that's some selling on Wednesday, Thursday, and Friday, kind of coming into the end of the week. And if you look at the daily chart, and I pointed this out to Noah yesterday, shoulder, head, shoulder potentially developing here. It's not quite there yet. I expect the Russell to press to new highs at some point. But Frank, probably the weakest out of all the indexes. Would you agree with that?
Oh, I absolutely would agree with that. We worked into resistance, made a lower high, right? Last week, looking at this weekly chart, ton of follow through on the sell side this time around. A little bit of a choppy chart right now. I think we're kind of back, realistically, until I think we see something new technically. I'll kind of approach it. We're kind of back in that range again, where we don't really mind the rut doing that, right? We don't really mind the rut, it can move, but not go anywhere, right? That's kind of what I like with the rut, and I think a lot of our condor traders do as well. So again, it can move fast. Everybody here knows that we've got some resistance. At the very least, if we're thinking, bull side, I think we have to kind of get back on the right side of that resistance, for me at least, before I would even want to be looking at that versus, say, the NASDAQ. And even then, I can't imagine why, directionally speaking, we would want to be looking at the RUD instead of the NASDAQ, not just, right now. I mean, overall, right? The NASDAQ chart looks great, and has continued to look great through, pretty much everything, no matter what the market's thrown at it. RUT, not so much, a little bit more sideways, action. And again, that's kind of the personality of the RUT, right? That's why I like it for condors.
Yeah, no, I'm with you. And I do like the neutrality of it. The cash flow condor still system that is just one of my top systems. I love it personally. And I like having it as a portion of my portfolio design. I think that one of the concepts I do want to spend some time with our pro members next week in our shows, and we've even got our coaches show design for this, is portfolio design. I've noticed a lot of students making mistakes about how much they're allocating towards certain strategies. And with the aggressive directional stuff, Frank, I see a lot of traders, they're going all in on the aggression or all in on condor. And I'm just like, guys, you got to have balance in the way that you trade, and you've got to take caution and understand your risk. And so we're going to spend some time on that with our pro members next week.
Love it. That's good stuff. That's very important. The charting stuff is what's interesting and fun to talk about, right? But the position sizing stuff is probably the most important aspect of trading. So that's awesome. That a lot to learn there. And even if you're comfortable with that, I'm sure you'll steal an idea or two.
100%. And there's not just one way to do it. And I'm going to bring Tyler on during the coaches show next week, and we're going to have a discussion about that. Very important topic, in my opinion. The reality is there's opportunities in the market. There's different ways you trade it. Neutral on the rut is a good thing. Move on to the dollar here, Frank, or actually Cody, you've got screen share, obviously. Dollar breakout, guys. I don't know what else to say. That's bullish. Money's moving into the dollar. They're seeing these other rags. Now, there's many things here I want to talk about. First off, the jobs report. Obviously, whenever you're looking at the currency market, you think about economic data. Jobs numbers were strong, Cody, right? I mean, 225,000 new jobs, unemployment at 3.6%. I know that upticked a tenth of a percent, but in general, pretty good report, right?
Yeah, the report was really good, and we actually did add. I actually think it was a little over twice as many jobs as were expected this past quarter. So that's always a positive thing when people are not only moving, into the workforce but out of unemployment. That's the reason you'll always see those numbers inversely correlated, and it's definitely a good thing. And something else that I read that I'm going to dig a little bit more into is there's an economist was saying that money is moving into the dollar because in addition to the U.S. economy still being strong, the U.S. is one of the most cushioned from coronavirus risk.
I read that as well. Yeah. And it does make some sense to me. I don't know if that's the only reason, obviously. I mean, when you have
that's why I didn't want to go too much into it. I need to read up on it, but I read that headline and I do think that's a curious point. I can't disagree with it. We do have a lot of cushion from some of that risk.
Yeah, the trouble, and here's the hard thing I have with news headlines like this, Frank. I'll process it. I want to think about it, but it might just be a news reporter trying to come up with a reason why the dollar is strong. I don't always trust that information. Here's what we do know. The chart is bullish, okay? So it's not a bad point, Cody, and it's something I actually saw as well, and I think it might be valid, but I don't need to worry about that right now on a Friday. In fact, Frank, you famously say you don't even check the news. It's not that you don't check it, but you mostly focus on the chart.
Yeah, exactly. I check it. My philosophy is they've got to write. They have to always attribute it to something, right? If I'm a reporter, I have to attribute it to something, right? And there's not a lot of people who want to read me talking about charts, at least from folks around here maybe, but broadly speaking, my philosophy has always been, short term, the news is a reason, and it's the excuse, the reason. They want clicks. And again, maybe I'm wrong, but that is my approach. Absolutely. Yeah. I'll call this a breakout. I still think that I hate the dollar as a swing trading instrument. Sometimes I look really smart. Sometimes I look really dumb by saying that. I understand that. But
I've said it many times. I think it's a day trade or a carry.
I'm with you. I'm not a fan of swing trading, but that doesn't mean there's not opportunities in there. This week will show that, and clearly a technical breakout. We've made higher highs and higher lows. We've got some chop ahead of us just north of that 99 that we're gonna have to keep our eyes out for. But at least from a technical perspective, no reason for us not to work into that resistance zone.
Yeah, no, I'm with you. Dollar strong here, breaking above some pivot points on the daily chart. Looks like we're going to have to upgrade that one. We're going to have those conversations over in the Forex discussion later. Noah is here. Let's move screen share. Happy to do that. Noah, Cody's got some Wi-Fi issues. If you can pop up and let's have you bring your screen up. How you doing, my friend? And you're on mute first off. How are the docs today, by the way?
Hey, the docs were great.
Yeah.
I want to know, you said that I was assimilating, but it's Mark. No, I thought that was Mark when he just came on the screen.
It was.
Cody is mini Mark.
Let me put on a bad attitude. How are you doing today? Crap.
So instead of max loss, you'll be like moderate loss.
Really just a modest loss at best.
Oh, not a lot.
That was good. That was good, Tim. I will credit you. That was really good.
That's fantastic.
Dollar running here, Noah. We're gonna have to upgrade this one, I'm sure. Let's go through the commodity market, though. Actually, there's a couple interesting things happening there, in my opinion. Let's start with crude oil. Trying to find 50 here, guys, and obviously, it's not confirmed yet. We are riding on the 9 EMA. It's a lot of the same conversation we've been having all week. Frank, do you expect 50 to hold?
I think it's too early to tell, to be quite honest with you. That candle, especially when you look at it on the weekly chart, I don't think that's telling us too much. What, for me, the biggest takeaway will be if it takes out this weekly low. That's where my signal would be that the sellers are still in charge. That's a ways away, though, and something, potentially will develop between now and there. No real great reasons technically I'm not seeing to think that it does hold, other than the fact that that zone has held many times before. So if you made me bet, yeah, I bet that it holds, because I think that's the best bet. But I would only want to bet it with Cody's money.
Yeah, a close below 50 would probably be the signal I'd see that would probably lead to a bigger breakdown. And yeah, I would take that bet with Cody's money as well.
You bet. Move on to copper again.
Gladly,
Noah,
guys. Just let me know how much you want to take away. I'll send it to you, and then I'll just.
If you ever want an example of a beautiful daily bearish retracement with confirmation, those candle patterns right there, Noah, I know it makes you happy. I'm going to bring it up for you just as a present. I mean, you came and joined us. Here's your copper chart.
I won't even draw a Fibonacci on it today because obviously we got it wrong yesterday. But that is a pretty chart. That is pretty.
Yeah. Clean red candles all the way down, Frank. 4 green candles backfilling into a retracement. Confirmation here today. Copper markets being bearish. It might be a signal that the world still sees risk in this China and the coronavirus thing. I mean, we've been talking about that for 2 weeks. The commodity markets are kind of more of an indicator of the economic risk than even the stock market right now. Money moving into U.S. stocks, out of copper here, Frank. Ugly chart though, right?
Yeah, well, it depends on how you're looking at it. If you're looking at it from a bearish point of view, very pretty. Absolutely.
M pattern developing on palladium. I remember one of the very first technicians I ever learned from, Noah, said M is for murder up here. I'm not so sure that we're going to have a murdered palladium, but there is some risk in that chart up here at the top. Now we're moving into a range. What are you seeing there?
Well, it's only murder if it breaks support. Otherwise, it's just a high base.
Yep.
But yeah, it's got that double topping action and the bottoming action. And if it breaks that bottom, that's really when the M becomes a complete pattern. Where it's sitting right now, there's no reason that support zone can't hold. I mean, you'll see this often where stocks will, pop up and then they'll get range bound. They'll stay. And so you'll see M, and it may even turn into a W if it breaks back up.
Mm-hmm.
But yeah, if it were to start to break down below that 2160 level and close below that, that probably creates a little vacuum in, one of those pockets that Mark will talk about, with the potential drop down to the 50 and that $2,000, benchmark down there. So, but where it's sitting right now, the little candle, little shadow on that on that near the support zone. Yeah, I can see the M, but I wouldn't worry about it unless it actually broke.
Frank, interesting question, because generally a conservative trader would not try to counter trend trade in here. Veteran traders might take this signal. I'm not saying on palladium here, but on any kind of pattern in general, if you got a break there, would you be willing to take a quick hitter down to 2000?
Risk to reward, assuming it was there, yeah, absolutely. I would need the break and close of support followed by follow through the next trading day. That's my personal rule, but yeah, I would expect that space to fill. Now risk to reward might be an issue. I don't know. Just going to 2000. That's one of the tough things with early reversals on the top side. For me, there's a lot of time the risk to reward isn't there. But I would firmly be open to the idea if we broke and if we showed some follow through and the risk to reward was there. Absolutely.
Yeah.
Because who's buying in that signal, right? Where's the argument from the bull side? I can see there a strong argument buying off of the 50, but between here and there, I mean, there's nothing, at least as of now.
Little vacuum there.
Yeah, there's just nothing there to, talk people into it. At least nothing that I can see.
Yeah, I probably would pass personally. I get no problem with the signal, with the entry, all that kind of stuff. I'm just more interested in buying a palladium longer term. So I might just wait till 2000, let that trade go, let you make some money on the downside, then come back in when it finds 2K, pivot confirmation on the weekly, then we roll. I don't want to miss this one. I'm getting some FOMO here, guys. I got to tell you, I have missed palladium so many times in this uptrend in the last 2 years. I don't want to miss this one. I don't know where the signal is. I don't know. I got to watch it develop day by day. I know it's not today. So that's all I got to know today, right, Frank?
Exactly. Well, let's go back to the daily chart and talk about that for just a second. Because no, I would argue that it is not today. But couldn't you argue that if we saw some upward momentum our next trading day, that we could buy the support bounce. I don't really trade that way personally. I'm not, I'm more of a break trader, as everybody knows. But couldn't you make the argument that, I'm going to bet on support holding here with a little bit of upward confirmation?
Sorry, I got so distracted. It still
Yes.
is a weird
Yes.
modern thing in this world when Alexa starts talking to me out of nowhere.
Is that who that
You know
was?
what? I don't even use this Alexa. I have no idea why it's in my office. It was given to me as a gift years ago. I need to just like delete that thing, get rid of it, I'm sure. But
Can
yes,
Alexa hear us?
Alexa,
Can you hear Cody?
self-destruct. No,
Hey Alexa, play Barbie Girl.
above the candle, I can see an entry point. Sure. Yeah. Especially on the weekly chart. Above resistance, definitely another entry point. If you break
Sure.
out of the 2400, you clearly have air up there. It's in a nice trend. Other than that, you might need some chart development. Noah, where is your next bullish entry for you, Noah, here?
Well, I get Frank's argument. You could be a buyer above today's candle, above the 9, but you're range bound. So you know that you've got a short trip up to 2,400. Of course, the 2,400 break would be very, very intriguing. That may take time to set up. And of course, you'd be paying more for it. Depends on, you could even leg into that, Tim. You could buy a single contract on the break and look to buy more if it breaks out. I like the breakout as well. I don't love the loss of momentum here, so I'd be more inclined to be a buyer on the breakout than I would be off just the candle.
We'll keep coming back.
I would agree with that. And I think ideally we're hanging in this range for another 2 weeks and we break 24, that resistance zone here, say at the end of the month. Then I think everybody would really like that.
Yeah, no, I'm with you. Let's move into individual companies here. Gold real quick, neutral. You can look at the chart. There's not much else there that we've not seen. And a lot of times, guys, that's what you're doing as a trader on a daily basis. In the halftime show, we break things down step at a time. When I'm doing this, Frank, I would probably in my own trading spend like 5 seconds looking at gold and then moving on, right?
Exactly. And Muhammad asked a little bit ago in the chat, how much time do you spend on each stock? Muhammad, we do basically our max loss now. So basically, do what we did with the platinum chart. What do we want to see? I'm not much of the buy at that support, but I get the argument. I would like 2-week consolidation and a break above resistance. So now my job really is to see if that happens tomorrow, right? So at first it might be a little bit of more time, but then as Tim said, he knows what he wants on gold, and basically gold looks the same today as it did yesterday, as it did last week, and so on and so forth, right? And so if we kind of think about what we want and why we want it, then a lot of that day-to-day stuff is just, it didn't happen today.
Yeah, that's right. Moving on to companies here. There's some interesting ones in the news today. Uber's still losing money, guys. They're mostly losing money on their Uber Eats platform, which, by the way, I've had good and bad experiences with that platform myself. Can't imagine how they would make money on it. They got to pay so much to run that app. $1 billion loss last year, but the company actually had a nice positive reaction to earnings. While that data is coming in for your Wi-Fi here, Frank, or for Noah, Frank, Uber in general, when you've got a debt-driven company, negative PE ratio, it IPO'd a year ago, but now it's starting to look good. You've got about a year full of data, guys. You've now have 4 earnings reports. Are you able to trade these kind of conditions, Frank? I know we say we avoid IPOs, but that's usually early on in the IPO. Now it's a year-old company publicly traded in the market. How would you approach an Uber here?
Exactly. Once we have some history that's developed, then it's good to go, right? And sometimes that might be 4 months, and sometimes it might be 18, depending on the stock. On an Uber here, definitely have to like the momentum, although we're starting to work back into some highs, right?
Mm-hmm.
And that's going to be what kind of throws some cold water short term for me on Uber. I have no objection to trading Uber, at this point in time. I see the momentum today, but again, I see a lot of overhead not too far above us. There's a little wiggle room in there, but I'm guessing the risk reward would not be to my satisfaction. But you got to like that pop and break on earnings. I mean, that's definitely a positive signal.
Yeah, no, you do like that. There's no doubt about it. I'm not making a new entry today, but you've got it on a bullish list. There's no question about that. I think in the short term, Noah, in fact, there's an easy lesson to teach in pivot relationships. Back in July, and this is something we teach in technical analysis. I know when you're teaching for legacy education, by the way, like at Master Trader, it's pivot, 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 pivot. Talk a little bit about that change in there, because I think if somebody can understand how that happened, you can better spot a trend.
Well, I mean, there's really only so many ways a chart pattern can change directions. There's honestly about 16 derivations of the pattern. They're double bottoms, heads and shoulders. It's just a simple transition from lower low and lower high to a higher high and higher low. And that, every reversal pattern you can spot out there, whether it's a double bottom, triple bottom, inverted head and shoulders, the uptrend starts when it breaks that first resistance point. So if you were to go back, the very first break of a minor resistance zone was here at 2750, but that's still not a lot of confirmation for traders. The next really clear trigger was above 30 when it broke that resistance zone out there. And that's as you establish higher lows, that's one of the big clues that you'll see. So like you think about like a head and shoulders pattern, like an inverted head and shoulders pattern, it's got that higher low pattern. That higher low is what makes the inverted head and shoulders so attractive. So anytime you see like the general slowing momentum pattern, and then you start to see higher lows kick in, you start to watch for that reversal breakout. And once it breaks out and it crosses up above, the resistance points, the moving averages will follow suit. If it can clear the moving averages, some traders like to use those as their price criteria to buy. But now you're definitely in an uptrend. You got an increase in momentum. You got the higher lows coming in much higher. You're picking up momentum. This is clearly on a bullish trajectory. And earnings, obviously, they're losing money. They're just losing less money than they expected, right? That's always they always like that. So yeah, that's a beautiful transition. And this one wasn't too hard to spot because this little higher low right there probably made that a little easier to identify than some other reversal patterns.
Yeah, I'm with you 100%. Now you've got earnings behind you. So now you got some clear air up into new highs probably here, Frank. There's going to be some testing over in that 42.5, 45, 47 zone. But as patterns develop, I'm going to be looking for entry points here on Uber, over the next month or so.
Absolutely. Yep. Nothing wrong with that.
Uber, Lyft, debate, who cares? Maybe just look for both of them. You can take a peek at Lyft, but yeah. It was silly at some level. Just play them both if you need to. Activision, one of our favorite companies to keep track of, had a nice quarter, a little breakout here, guys. Outside of Uber might have run too far. I actually think you can make a case for Activision here, like on a Monday morning with momentum. I think it's a lot closer to an entry on momentum. Now, it's not a great trender. Activision kind of meanders up the chart. Now, by the way, still great performance from June until now. It's up $20 a share, 50%, Frank. Strong holiday sales, and that's their World of Warcraft game, their other titles, all the things that they do. Pretty good looking chart here. Frank, is this the kind of stock that you would trade, swing trade, position trade? How would you approach it?
This is what I call a worm burner, where they go somewhere, but it's so choppy and slow that I put them let's put them into either cash flow or position styles. I've not had a lot of success, with things like Activision Blizzard from a trading perspective. You have to give more room than your targets allow for a swing trading target. At least I feel that way. Really do like it as a cash flow trade instrument, whether it's a poor boy, a covered call, credit spread, naked puts. Think that makes a lot of sense with what we're seeing on Activision's charts and what we kind of see come through their earnings.
Yeah. And by the way, out there, Team Tackle, if you're watching right now, a couple of things, programming notes, but at the end of this show, we're going to be doing a Q&A session. We do it each and every Friday where we open up the mailbag. We ask you guys to put questions in the chat, and then we will answer them. So if you have something you want to ask the coaches here while we're here in the show, it's a great time to just pop it in anytime. I'll keep an eye out for it. Got a few more stocks to go through. And also we've got, a nice audience here, but not enough of those thumbs up. Give me a quick thumbs up if you're still watching and enjoying the content. Always a great thing for us as well. Let's move on to Pinterest. Obviously a social media company that actually makes money. We've had this discussion many times internally. We like Pinterest because the platform is what you use to, people use it to actually go buy stuff, Frank. And so in my opinion, I can see a path to where they can be a very profitable company. They had a blowout quarter. Frank, that's a very different candle off of the earnings though. When you see a red candle on a gap out, what's your first reaction?
My first reaction is good. So unless it's breaking a key level of resistance, because I want it to develop. What I would love to see is a little bit of a consolidation, and then play it basically as a break there. That's how I always feel on those earnings, and so pretty consistent with that answer. Still holding up. It looks a lot like Amazon's candle did. Placement wise, not so much because Amazon was right at that resistance zone, right? But where we kind of had that hammer developed, at this point in time last Friday, of course, it ended up pretty red by the end of the day on Friday. I'm always looking for that consolidation followed by that break from there. That's what I want to see. And as I say it a lot, it can be 2 days, it could be 2 weeks. It's not so much the time. I want to develop that top and that break. And by getting that, I'm making sure the momentum is at least trying to come back in, right? Whereas if I buy it right now, I may or may not, I'm not buying into momentum, I'm buying into the gap, which may or may not end up being a great idea.
Sure. Yeah. Noah, I mean, that's a red candle up here, but at least a watch list on the bull side, right? The pivot relationships are the same as in Uber.
Well, and if you notice, that's the 200 period moving average finally showing up. So you've got a 200 period moving average, a gap up above that. And, hey, congratulations. You've made it to your first 200 days of trading. That's fantastic.
Well, and by the way, the last two, Uber and Pinterest are examples as to why a lot of traders avoid the initial IPO period. The initial period, it might go up or down. It's very volatile. Usually these IPOs end up settling all the way down through their first year at some point. This is when I start to get more interested. It's not that you couldn't have traded a lot in the last year, because you could have, obviously. But now we've got a year of data on both these companies. It's a lot easier to wrap your head around this, right? In fact, you got the 200 MA there is good confirmation.
Oh yeah, absolutely. Plus, I mean, this really is about as typical of a IPO as you see. Like, it's really, really common to see prices run up at first. Off of optimism, and then you see them go into a corrective phase, and then it really kind of comes back to that initial IPO price. How good were they at getting that price right? I think it's back up, heading back up there after that initial depreciation, and it finds a bottom. So this is really, really typical. I typically see them go up, then down, they find a bottom, and then they start heading back up again.
Yeah. Interesting corporate news out of Match.com. They're looking to acquire a company called Meet, MEET.
Oh, I thought you were going to say MEAT. A veritable online meat market. They should have thought that through with their marketing department a little bit.
That would have been fun. Yeah. Bring up MTCH for a second here. I don't use these apps that Meet has. Meet Me, Lovu, Scout, Tag, Growler. I've never used them, Frank. I don't know what this is, but they do a lot of online video stuff, which actually would make sense for Match.com. Pretty fundamentally strong company. Interesting chart pattern here, guys. Frank, you break that down for me if you can.
Well, at this point in time, we've lost a lot of momentum after our nice run, right? We had that break here a few months ago, bouncing off of the 200, definitely a nice starting point. For me, I want to see that support hold, and we now need to take out that resistance, that pivot from a few days back before we can kind of start getting too terribly excited. Unless you're buying off the 200, which you already did, right? If you're kind of blind buying off the 200, well, you already did that, right? We've already seen that. So right now we still haven't changed trend. You could see a little bit of slowing momentum potentially. We saw that big drop early in the week, and we've held very nicely, but haven't broke resistance. Again, for me, break resistance, that's a good signal. If you're not doing it, I have concerns about you.
I really like it from a corporate standpoint when companies the size of Match.com, who's growing, it's been a really good performer, $20 billion. This Meet, MEET, Noah, is publicly traded, and they actually have a pretty good chart. I looked at the fundamentals on this when I read the news. It looks like a damn good little small cap company. Growing sales, growing earnings, all this kind of stuff. They've got their own IP. They've got these different divisions. So when a big company is starting to buy these small companies, Noah, I usually see that as continued growth for the Match.com. Obviously, there's not much here to trade on Meet, but I do like that. What about you?
Well, I mean, honestly, if it's an acquisition, you just kind of have to look at it from like the company's like numbers, what's their revenue, what kind of debts do they have, et cetera, et cetera. So you can see what Match is absorbing. But And if they're both looking strong, I don't think that that's a bad problem. Plus, it obviously gives Match more hold in their space.
Yeah.
That's certainly a positive. And I really like the pattern here on Match. I love that 200 period moving average. Backing it out to a weekly chart. Tell me you don't see a forming cup and handle there.
Sure.
Mm-hmm.
That's pretty.
And it's been a great performer for years now for many reasons, but they've got growing revenue and earnings and obviously a product people are using. Guys, there's a lot out there. Take-Two Interactive, by the way, down their gaming software and their titles, Frank, must not be selling. Activision's winning that fight right now. Take-Two, what do they do? Like the Grand Theft Autos?
Red Dead and Red Dead Revolver. And I don't play a lot of their games. I'm a Blizzard guy. But again, an earnings miss on Take-Two is what kind of sparked this here. And then, again, we miss earnings. We break below the 200. We break below support, and not a good look technically, at least short term for Take-Two here.
Yeah. And then last one, and then we're going to go to Q&A. So if you've got a question for the coaches today, just pop it in the chat. We're going to discuss them. We'll take 2 or 3 or 4 of them in the chat as we go. Synaptics, SYNA. They are a company that does a lot of the software and hardware stuff for like sensors for the iPhones. They work directly with Apple quite a bit. They blew out their earnings, guys. And that's just a beautiful uptrending, now increasing momentum chart. That's the kind of deal we've talked about it a little bit like Uber, but different because now we're at a new high point, right? Give it a time consolidation, give it something here, but guys, definitely bullish, no question. Not even,
that's a nice earnings pop nest. Have to let something settle into an identifiable entry. I got one for you, Tim. Our old friend Work. We've got to take a look at Work.
Oh, Slack.
I wish every time I popped in the symbol, it would give me a little Slack message alert. That'd be awesome.
Yeah.
So Slack's been really interesting because, we had that long downward move after their IPO, like we've seen so many times. We really went sideways back and forth. This is what, I didn't coin this, but, kind of think of it as a K trade. If it breaks that support, that's a pretty big sell signal. But if it breaks that resistance, that's a decent little buy signal. Definitely think this is an interesting chart worth keeping an eye on as we're kind of knocking on the door of that resistance zone.
If it broke below 20, I would have shorted it. If it breaks above 25, it's a buy. I still love the fundamentals on this company. I love the product. We use the service internally at Tackle Trading. All of us know Slack very, very well. Guys, from a longer term perspective, I'm a firm bull. And Frank, now even on a short term perspective, because it did pop this week, I'm still going to be on the bull side of that argument.
Absolutely. And I love these type of patterns, these potential reversals, because your risk to reward ends up being pretty impressive. They're not the highest probability trades. That's there's no doubt about that. But I really would anybody here be surprised if this flies, if it does break resistance, if it's hanging out at 30 or 35 in 2 months? Because I wouldn't, not in the slightest.
Sure. By the way, it's newsworthy today that Tesla's actually not doing anything, that it's flat finally for the first time in a long time. Little doji heading into the weekend here, maybe. That's, what is it, 0.5% up or down? After this move, though, that is definitely a know-nothing day. It's going to be an interesting to watch.
That's not a Frank trade, but I could see an argument for playing it bar by bar. Above today's high on Monday morning, below today's low, and just playing it bar by bar.
Listen, technically a bull flag there. If it broke back above this candle, you could absolutely trade it. But I would understand a trader saying, no, thank you, not for me. I don't need to ride that whirlwind right there. Up to the trader. All right, guys, we got a few questions coming in here, and I'm going to go right here. Frank, make sure I don't miss any.
You got it.
Okay. Max Law says, coaches. No, I already got that one. How much time to spend, going through each symbol on the watch list? I think that's Mohammed, I believe, like you said. Love the change of the name.
That's good
Dolene,
stuff.
Would you wait for a consolidation to sell a put? That's a great question.
It is
Noah,
a good question.
Let me pitch that to you first. Would you wait for a consolidation to sell a put option?
Depends on what kind of setup. Like, I actually really like taking advantage of a stock after a big drop. Because you get a little spike in volatility on the big drop, which can make those out of the money puts a little more expensive. So there's a trade-off. If you don't wait for the consolidation, you can sometimes get a little extra premium on the volatility spike. But if you wait for the consolidation, you probably have a clearer technical signal. You typically take a little less premium for that, but I think it's a pretty decent trade-off for the more conservative trader. So like somebody like Gino, after a gap down or a big drop down, they'll sell the put just when they see it slowing down. When they see a key support zone, they'll go ahead and sell the put because they're expert at managing it. But if you're newer to selling puts, wait for the consolidation, wait for the stability in price before you go sell the put.
And she's specifically asking about pins, I guess. She's clarifying. Thank you for that, Solines. But the reality is, I think it's a good general question as well. I mean, what are you looking for when you're looking to sell put options? Do you need the same technical criteria? Frank, doing naked puts, if you're willing to take ownership, you don't necessarily need like breakout confirmation and candle confirmation, do you?
I do, but no, you
do.
don't. Yeah, I treat everything the same, I guess. So it's always the same signals, and the vehicle is just the vehicle. But again, I'm, wimp. So, but I understand the concept behind it. You get a little bit more zone, and the key there is as long as you're willing to take ownership.
Sure.
Well, yeah. So, let me ask you a question, Frank. You said a bit of a wimp, but I don't think that's how one starts out as a trader.
No.
Did you develop that over time, right?
I've gotten progressively wimpier as the years have gone by. There is no doubt about that.
Well, and I didn't have any doubt about what your answer would be, because I think that's how all traders start out. Like you learn your rules through a process of
everything was 10% of an ATR above resistance for me at the beginning. Yeah. Are you kidding me?
Yeah. I get it. I think it comes down to style, though. Like a boomerang style trade, if you are truly willing to take ownership, I don't think you need price confirmation the same way you will if you're swing trading. But again, trader by trader, you've got to have rules.
I mean, the big thing is you have to mean it when you say it. It's easy to say I'm willing to take ownership at 20. You better darn well mean it, because that's where those mismanagement decisions can really get you.
That's right. Yeah, absolutely. 100%. Selling a naked put the day after an earnings as well. I will tell you guys this, I don't mind doing it early on after the earnings, because usually the volatility crush has not completely come out.
Right.
IV and implied volatility does drop after earnings, but you always get that little bit extra that's going to fade out the next couple of days. Would I sell a naked put here on Pinterest? That's a good question. Probably not on a Friday heading into a Monday. I would at least wait for some price stability through the weekend. I like this, but because a lot of times, guys, those things gap fill, don't they? I mean, there's nothing about this candle that screams, I got to do it today.
Not to me. Although we could take the idea of scaling in, where we sell our first one, and if we do gap fill, sell our second one. Obviously, position size would be a big thing there.
And by the way, I would not fault somebody saying, hey, I'm selling naked puts at 20 because I love the company and I'm going to do it till they put the stock to me.
Not at all.
That's a different boomerang style.
Different conversation for sure. Yep. Not a problem at all.
Good question, Solene. Let's go to the next one here. Frank, I think we got one from Max Loss. Is that right?
Oh, we were talking a little bit earlier on, but yeah, we got how do we deal with frustration, self-doubt, and other emotion? Always the human part's the toughest part in live trading each day. That's a great question, and I wish there was an easy answer. The easiest answer, in my opinion, is going to be have a system, the same boring rules that you apply time in, time out. So it's not really decision making, it's more automation, right? Hey, if this breaks and then closes below support, follows through by 10%, that's my sell signal. That takes the me out of it, right? And so when it does or doesn't happen, the me is out, right? And so that's a big part, is knowing and trusting your system and not making it up on the fly, right? So for me, a big part of it, Mohammed, is I do all of my prep. I do very little during market hours. I do my prep at the market close. My day is usually done at 8 in the morning, barring some weird stuff happening that day, as a general rule. So I'm not particularly great at making decisions while the market's moving. I just because it's money, right? I'm down $60. That's not cool, or whatever. So that's something that's helped for me, is prepping, at night for tomorrow in the morning, make sure everything's up and running, and then basically go from there. I'm not really looking to add new trades at 11:19 on a Friday or a Tuesday or whatever, as a general rule.
Yeah, you don't want to operate like a paper bag in the wind. You don't want to be floating from stock to stock and new system to system in the middle of a trading day. I love your answer there, Frank. It's system, it's process. There's a reason, Noah, why we have checklists. Not everybody's left brain, but even the creatives, they build checklists in the market because it takes the emotion out of it. You go through it step by step by step. You follow your rules, you follow your process. Yeah. Anything to add to this one, Noah? Great.
Yeah, probably the easiest way to reduce emotions is reduce position size.
Yeah.
If you're feeling a lot of stress and anxiety around positions during the day, that might be because your position size is a little beyond your pain threshold. The easiest way, again, is to go with the type of position size that doesn't get you excited, doesn't make or break you if the trade goes bad. And then having those rules in place is absolutely critical. I saw something on Twitter from Steve Burns, who a lot of traders follow. He said that a trade plan is a promise you make yourself.
Yeah.
Which I liked. I thought that was a pretty clever way of putting it. Because if you've got a plan in place, what you're really promising is to protect your capital. And if you've got that predetermined game plan, that predetermined risk tolerance, that takes a lot of the emotion out of it. And it has to be a risk tolerance you're comfortable with from the onset to place the trade to begin with.
Mm-hmm. And last one here, a really good one, and actually very, very appropriate for a Friday afternoon because we're going to be doing this later today. Jeremy Johnson asks, can you give us a breakdown of the -3 to +3 ratings? What separates a 1 from a 2 and a 3? I understand the general sentiment, but I'm wondering if there are specific triggers you look at. They're not a specific. I'll answer this one broad-based, then I'm going to have the coaches come in and kind of give some clarity to it. There's not a specific thing that makes me know that it is a 3 to a 2. Okay. There is some arbitrary judgment there based on the way that I see markets. And what it comes down to, and the way that we do it as a community, Jeremy, and we've built this process for a reason. We don't let one voice make the decision, right? We have every coach at Tackle Trading put their input on where their rankings are. So like, for example, on the S&P 500, the way that we came to the clarity of being a +1, Noah, instead of a 2 or a 0, is that we had you and Frank and Cody and me and about 10 other people in a meeting last week, and we have a discussion about it. We have differences of opinion, and then we come to that clarification. Now, Jeremy, I will also say some of it is based on bell-shaped curve distribution. Like a +3, in my opinion, if you think about a curve, the bell-shaped curve, I'm only going to rank something a +3, like the 5-10 yard marker, Frank, 5% of the time, maybe less, 3% of the time. It is a very rare thing to go to that aggressive of a rating. That means something very unique is happening in the chart. Noah, what's your answer to this question? It's a good question because we get this one a lot. I mean, we do this newsletter every week.
For me, it comes down to momentum. If I have an increasing momentum picture, that increases my bias.
Mm-hmm.
If I see a big increase in momentum, I would probably go as high as a +3.
Mm-hmm.
But if it's just a typical trend, I'm not really going to feel the urge to upgrade that to a +3. If it's just a standard trend with kind of even channel, that's just bullish to me. But if I've come off of like a big increase in momentum up or down, that's what puts me into the +3 category. And then the one's not hard, or the 0 and 1s, that's just kind of neutral to very modest signals. Mm-hmm. So yeah, for me it's that increasing momentum that really would tip the scale for me.
Yeah. And in my own personal bias, Frank, and I'm going to bring you in on this one, I would say for me to go to a +2, that's a big deal for me personally. From a 1 to 1 is easy. If the market's bullish, call it a 1. If the market's really aggressively bullish, okay, then I can go to a 2. I probably only go to a +2 maybe 20% of the days of the entire year, even when the markets are bullish. What about you, Frank? How do you answer this whole conversation?
Yeah, I don't think I've ever went to +3 on the market, or for me, that's more would be an individual stock, and even that would be rare. But Noah's answer really resonates with me, where it's the momentum. If I'm in just a chill, lazy trend, Activision Blizzard style, for example, that's just going to be a +1. The trend's just going, no reason to think the trend's going to end. But this isn't, knocking your socks off day by day. right?
Mm-hmm.
And so just a nice mellow trend is going to be in that, 1 -1. If we're in this big range like the dollar, I've been at 50 on the dollar for as long as I can remember. Any given, short term, I might be more bullish this week than, the next or whatever, but being stuck in that big range, I'm not going to try to figure that one out.
Mm-hmm.
When in doubt, go to 50, right? so,
You
so
are the fence sitter in the coaching staff. I can
I
tell
am.
you that.
Yeah, I'm not afraid to admit it. But if there's, if I'm not seeing anything clear, I mean, I'm not afraid to say yuck or boring or,
Sure. No.
so
And there's nothing wrong with that. I think it's a reflection of what you were talking about earlier about the way that you run your day and the way that you've developed. And the question Noah asked you, the longer you trade, guys, the more kind of conservative you become in your assessment, your entries. You make sure you're following your rules, and you have to, or else you're not going to stick in this game, guys. You've got to build a system, and you've got to have a way you approach markets. Noah, Alcoa, they're looking pretty good, popping
Hey,
through
real
some
quick
charts.
to add to that, Tim. I can't remember what book it was, but I remember reading a book about trading and the mindset, and it said the goal is not to get rich quick. The goal is to survive long enough to build your education.
Yeah.
And I like that because, I mean, everyone's going to make mistakes, but don't over position size. Don't get yourself thrown out of the market. Don't blow up your account because you're trying to get rich quick.
Well, and here's the bottom line with that, Cody. You don't want to make a mistake in your first couple of years in trading that's going to put you in jeopardy for your 10th or 15th year of trading.
Yeah, save that kind of mistake for the end of your career.
Sure. Yeah, blow it up at the end.
Go out
like
big.
that guy, like that dude went out with optionsellers.com. That's right. Yeah, throw some gas on it, light that fire. There's no doubt about it. Yeah, and I was even having a conversation, and I won't go off on this too long here, but with Mark this morning about the process of building a trader and how you get good at this. The reality is you've got to have a system. You've got to have an approach to the market. You've got to have proper portfolio design. And generally, the traders who are the most consistent, in my opinion, they're focused on cash flow and delta and some balance between it, but they know what they're doing with their capital. And it might take a couple of years to get there, by the way, Frank. I mean, you've been trading 15 years. You didn't have all this wisdom in, your first couple of years of trading. This stuff takes a little time to really grow into the things you're talking about today, right?
Well, exactly. And you're always going to get more wisdom. You're never done. That's not ever going to happen. And Adidas asks, do your systems evolve over time? And absolutely, they do. I wasn't always breakout, Frank. That's just the way it's worked out. Is I've had better success doing that than some other type of strategies.
Yeah.
And that wasn't where I necessarily started. When I started, I was learned with the stochastics and MACD and stuff like that. And so yeah, I think you naturally do evolve as time goes on. But it is a process. There's no doubt. It's just like anything. I mean, if you think about it like anything else in your life, you get better the more you do it, right?
Mm-hmm.
Because it's our money, and I get it. Believe me, I've been there. Because it's our money, we want to just skip the middle, right? Well, let's just know exactly what we're doing and have everything figured out. And while it's a great idea in theory and practice, well, I don't know, I couldn't pull it off. I don't know anybody else who did. Doesn't mean maybe you can't, but I know I certainly didn't.
By the way, there's a lot of triggers on the option stock report today. Even from last week's reports, one of the things we do in our community is we put our experience into going out and building watch lists, and we put these lists together each and every weekend. Noah, pitch our pro membership real quick, if you will, just here to end the day and kind of talk about the value of what we're doing as coaches, as veterans that we're providing to new traders.
Well, here's my elevator pitch. The pro is awesome. You should all buy. It's really a fantastic value. No, the what we've put together here at Tackle Trading is something I'm really very proud of, Tim. Just the time and the effort and everything we put into building the education, the trainings, the systems, the community, and what I am most pleased about is just how awesome the community is, that there's a tremendous amount of value with that, but also. That those scouting reports are such a valuable commodity, Tim. And I've paid for plenty of scouting type systems in the past between software programs and newsletters and stock picking services. But I've never seen one that does it quite like Tackle does with, again, a qualified list with kind of those the triggers, stop losses and targets kind of laid out there for you.
Mhm.
A good template for you to follow, but that also requires your discretion as a trader, and you do need to build your education to really go along with it. So you got the step system that goes along with it. You've got the training that goes along with it. So it's not just the stock picking service. It's not just a trading room. It's a real great combination of, I think, all the things you need to put into place to be a successful trader. It's the ongoing education, the having a training to go through like Systems 101, learning the technicals and option basics, getting all those foundations really built up well, and then having the constant sounding board of the community and the coaches, just to help you, keep yourself on the right track, because it's so easy to veer off into the woods. And having the community, to help each other out, to congratulate people on their successes, to help people out when they skin their knee, and maybe feel down about it because they had a bad trade. That we all go through that. And so having that community and just seeing that everybody else is going through it and learning and growing and progressing, it's awesome. Like, it was really fun this morning in the Traders Lounge, Tim. We got on and we talked about a volatility trade that we did on Wednesday, and we followed through with it. The company announced earnings, the volatility crash, worked out like a champ. And it was a strategy brought to us by one of the members of the community. It was Emily who brought it to the community, and it was just a great little trade. And it was something that, I felt really good seeing that little taste of success for everybody who participated in that. And then just, seeing, oh, hey, sometimes this stuff actually works. It just comes down to having good systems and rules. And there's so much benefit in getting that laid out for you. And again, having skilled instructors kind of show you the ropes. There's tremendous value there. So by all means, sign up. You got your 15-day trial. We always have that offer. And that gives you a good chance to test it out, see what it's about, and get to know us better.
That's right. And quite frankly, if you've not tried it yet, there's not really any risk. Give it a try. We put out the reports on the weekend. It's a perfect time to set it up. There's a link in the comments below. If you are a veteran of our community, you already know the value we provide. If there's ever anything we can do that you're looking for, shoot us an email, team@tackletrading.com. We like to have conversations and be open about who we are with you guys and build our relationships with our traders. No question about it. Great job, Frank. Great job, Noah. We got to wrap this one. We are done here today. We will see everybody on Monday in our halftime show. We'll see you then.
Thanks, everybody. I'll have a good weekend.